Hi, good afternoon. Watching closing trades right here in ET now, and what a day it's turning out to be. A relentless move by the bulls, even though it's a truncated week. Tomorrow being a trading off, and we're holding the Nifty at that all-time high. 22,774 is where we're currently at. The futures have nicely scaled above the 22,800 print. M&M is the one which is really powering up ahead. The new SUV launch within the affordable segment is what is really driving as a kicker right now. And of course, tomorrow you'll have Motan hand out its report card for the month of April as well. But that said, M&M of course is taking the lead today, 4.6% higher in trade. Banks are also participating and continuing their uptick that they have seen all through this week. So Indices Bank holding up higher. There's Axis Bank as well, which is higher by another 1.6%. Bajaj Finance has seen a consistent rebound, 1.3% higher there as well. And then, of course, there's Asian Paints, which also continues to look good. But let's welcome on board Nilesh Kambli, the CFO at Star Health and Allied Insurance, joining in on the show right now. Nilesh, hi. Good afternoon. Good to have you on ET now. Nilesh, your combined ratio has moved up a little for FY24. Where is it that you see this number going directionally?
I would like to mention that for Q3 2024, our combined ratio was 97.8%, which has improved drastically to 92.7%. And for the full year, it is 96.7%. We had some higher claims impact in the month of September and October, because of which the claims ratio was higher and which has an impact on the overall combined ratio. But we see that this is moving lower and we are confident of improving on this in the years to come.
Right. Hi, good afternoon, Nilesh. This is Cheryl, so joining in the conversation. Talking about your internal targets, have you set anything as such for FY25? What are the targets that you're aiming to achieve?
See, for 2023, we had achieved a combined ratio of 95.4%. For this year, as we spoke, we have achieved 96.7% and would better this combined ratio, which will give us an ROE of close to 20% on an IFRS basis. On a reported basis, we've always maintained that it will be an ROE of 16 to 18%.
Right. So let's shift focus then and let's talk about the growth in your agency's channel. If you could shed some light on how is the growth if you talk about the bancassurance as well as the online channels in the quarter gone by for your company?
See, agency channel is our flagship channel with 82% share. For the current year, it has grown close to 18%. It will continue to do well, and we are taking a lot of initiatives when it comes to agency channel. Again, this growth of agency channel is by choice. We have decided to let go businesses in loss-making territories, certain portability business, and we are focusing more on the quality of the business. When it comes to banca and digital channel, we have grown close to 35% in this segment, and we'll continue to grow faster. We're targeting more than 40-45% growth in this segment for the coming year. One more segment of growth is the GMC segment, which is a group medical segment, employer-employee in SME and MSME segment. That is one more focus area for us. We have been very, very cautious, but we see that the market rates are improving. And that is again a big driver of growth for us. So we are going to fire on all the cylinders, and we have initiatives and strategies planned for each of the segments.
Right. So given that IRDAI also is coming up with the digital channel, how do you think it's going to benefit your product portfolio?
See, when it comes to IRD initiatives, what IRD is trying to do is, it is trying to penetrate market. Today only 4% of the Indian population has retail health insurance. The idea of IRD is to bring in affordability, accessibility, and availability of health insurance. It's a very good and big initiative which will help to expand the market. And Star Health as a leader with 33% market share it's going to benefit it in a very big way.
Right. So to add to that, IRDAI has also recently revoked the age limit for health products. How do you think this is going to impact your product line?
See, I would like to mention here is Star Health always had a very innovative product in terms of senior citizen red carpet plan, which was available up to 75% of age. So this initiative definitely will not impact Star Health. Having said that, the other things which IRD is likely to do, these are discussions in progress, but there is going to come some price benefit out of this initiative.
So Nilesh, are you anticipating that this move by the IRDAI will in fact go ahead and aid your volumes for the business going ahead by any chance?
No. See, all the initiatives are towards improving the health insurance penetration in the country. This will definitely increase volumes. Insurance is a business of large numbers. As more and more people come into the net of health insurance, we see that the profitability of the overall business improves. Today, when the volumes are less, it is anti-selection. Only the people who are claiming comes into the fold of health insurance. But as the market keeps on expanding, it will improve the profitability of the overall business as well.
Right. So you had a very healthy quarter gone by. When you talk about the profit growth, it's been approximately at around 37% or so. Are you expecting that to sustain such a momentum going ahead?
Yeah. So for the current year, we had a 37% improvement in PAT to 845 crores. We have an ROE of 14.4%. With the initiatives that we're taking in terms of growth in business, the profitability initiatives in terms of loss ratio control, cost optimization, we see that the combined ratio will continue to improve for us. With this, and along with the investment book rising by 15% in the current year, the investment yields have improved for us. Our exposure in ETF rates and rates has given us huge investment income benefits. We see that the profit growth will be similar in line with what we have done in the current year as well.
Okay, great to have you on the show. Thanks so much for taking the time out and speaking with us today, Nilesh. Good speaking with you. Let's move on. Let's take stock of what the market is up to, and pretty good actually in ship shape. Nifty at an all-time high, IndusInd Bank, Axis, rebound in Bajaj Finance, and of course it's Motown which is leading the way, with M&M being the top gainer today, coupled by a decent move in Maruti as well. Even the broader market is extremely lively. Look at REC, that's a 7.5% surge that the stock is currently seeing. Jubilant FoodWorks higher by 6%. This trend, at the same time yesterday we were marking when the numbers came out and the stock fell 4% after that, one-off income which the market wasn't quite clear as to what it pertains to. From there, it's seen a meaningful rebound, shot up 8% in trade, and then from there has petered down, still higher by 3.5% in the cash markets as we speak. So let me bring on board then our next set of guests, Mahantesh Sabarad. We've got Kunal Bothra and Naresh Mirani as always on the show. Kunal, hi, afternoon. Let me start off with you. All-time high here, broader markets in ship shape. What next?
Yeah, I think it's just picture perfect for the markets because, sector by sector, day after day, we're seeing a lot of strength coming back into the indices. Good many large cap names which have been underperforming names. So in the last couple of days, we've seen almost 3 or 4 big underperforming stocks making a slight comeback for themselves, whether it's HDFC Bank, whether it's Reliance Industries, Kotak Bank, and even Bajaj Finance. I think today has made a very good comeback in the last 2 days relatively after that sharp sell-off. So I think that itself sets the tone for the indices to try and get back into sustainability. We are now about to just very close to that 50,000 mark of the Bank Nifty for the first time. I think that's also going to be an important landscape for the Bank Nifty. And typically when we see those higher digits or those psychological marks being broken, they act as strong support zones going forward.
Right. Mahantesh, just marking one on the bottom of your screen, you have IOC's number coming in right now, and among the first majors OMCs to report as numbers of quarter-on-quarter basis. If you look at the numbers, they've definitely seen a decline in their profit, 40% down on a quarter-on-quarter basis. The revenue also is taken a bit easy. The margins also have been hit. Where do you see actually all of these OMCs actually headed from here on, given the fact that IOC has not reported a great set of numbers now?
So you see the oil prices is a factor that is affecting most of these oil companies. In the recent past, we had seen there was a jump in oil prices, crude oil prices. So the refining margins, I would guess, looking at the result right now, would have definitely been compressed. As it is, the refining margins for the last 1 odd year, particularly for the public sector oil marketing companies, has been pretty low. And coupled with the fact that you don't have much in terms of offtake volumes, the offtake volumes have started just recovering now. There was this post-COVID overhang in the offtake volumes, but the overall sense seems to suggest that the profitability is taking a hit from high crude prices. You have refining margins compressed, and you have pretty low throughput coming in.
That's the take coming in on IOC right now. A couple of buzzers out there, and we've been marking the strength in REC, PFC. They are the ones which are really holding up high. And of course, within the Nifty, it's banks once again, with the Nifty Bank crossing that 50K mark. You've got autos, which are holding up very well, and financials as well are not looking bad in there. But Naresh, to you specifically on PFC, REC, considering they are the top movers within F&O today?
So a clean breakout in both of these names and a good consolidation has also taken place for the last 3-6 months. So now the trade is to keep a stop loss at today's low or a little higher. So in terms of say REC, the stop loss will shift a little higher towards 465, 470 levels. That's also a little deep at 500, but closer to 485, 490 would still be a buy with a stop loss at 470. Same is the case with PFC, would be a stop loss at 420, 25. And then look out for a buy on dips. Breakout has been good. Volumes have been good today. And the classical strategy in this cycle has been wherever there have been trends, the trends have just continued. And the only way to ride them is to keep participating in fresh breakouts with a stop loss. So that's the case with PFC REC. Someday you would get stopped out. That's the time the discipline would play in.
Kunal, let's talk about what is happening with the IT sector as a whole. If you look at the top 4 draggers today for the Nifty has been from the IT pack, be it Infosys, Tech Mahindra, or for the matter of fact, TCS. Where do you see the IT sector headed from here on? No doubt that most of them reacted to their numbers. Tech Mahindra was an outlier.
Well, it's an outlier, but then when you look at the pack, there's not been any kind of momentum for the sector. So you look at TCS, the stock is struggling now at the 3800, 3900 zone. Infosys around the 1440 mark. Wipro at 460, 470 odd levels. So that's a big concern, because when you're expecting sector trends or sectors to get into revival, you need at least 20%, 25% of the huge underperforming names to make a comeback, and the rest of them which have been huge underperformers, they could see some bit of recovery, at least stability in terms of price trends for themselves. But we are not seeing that happening for these stocks. HCL Tech, I think if I'm not wrong, yesterday the stock made a fresh multi-month, multi-week low for itself. So on the back of this huge selling pressure, I would probably believe that the IT sector could tend to underperform. And look at it this way, that you have better opportunities available in the market. So, for example, the banking stocks, private sector banking names, large cap stocks are doing pretty well. So I think the markets would want to focus on the performing names rather than the underperforming ones.
Right, okay. Well, IT clearly not in favor, and that's quite reflective on the way the stock prices have moved. By the way, IOC has now, slipped further in trade, and that's down about almost 4% as we speak right now. So slipping pretty much to the day's lows, and I don't quite think the selling is done. It's now down 4.5% as we speak. But some news for the insurance sector, and the regulator, IRDAI, is reconsidering changes in total surrender value for life insurance policies. For more on this, my colleague Anurag Shah joins in. Anurag?
So it's a bit of a negative development for life insurance companies, because in a recent meeting of regulator with the insurance companies, the Bima Manthan, there's the discussion to increase the total surrender value for the life insurance policies. So total surrender value is consistent of guaranteed surrender value plus special surrender value. So now the formula will be derived to calculate a fixed increased special surrender value, because we remember that in December 2023, IRDA came up with a consultation paper to increase the surrender value, and that the proposed surrender value was increased by 5 to 6 times. But in the final regulation, because there was a resistance from life insurers claiming their ALM mismatch and the margins will be hit. So in the final regulations, the notification which was published on 23rd of March 2024, there was no major changes. So surrender value was linked with the duration of the policy. So if any policy gets surrender in the first 3 years, there was no major changes were there. But now in a recent meeting, again, regulator has discussed to increase the surrender value, total surrender value, which include the guaranteed surrender value plus special surrender value. So there will be a new formula to calculate special surrender value, which will increase the total surrender value. So effectively, life insurers will end up giving more surrender value on surrender of policy, which will impact their margins.
We'll leave it at that. Definitely sentiment positive for life insurers. Mantesh, I don't know if you caught my colleague over there, but one has seen that play out with some of the life insurance stocks as well, which have clearly been out of favor for, I think, now almost 2 years.
Yeah, I think the stock listing post of LIC was something which really spooked the market as far as the entire insurance sector was concerned. Not just that, what really happened for the insurance companies is that over a period of time, the COVID-linked claim ratios temporarily went up, affecting a lot of these life insurance companies. So, and then you had interest rates in the interim actually rising. Fortunately, for the past 1 year, you have interest rates quite stable, and the outlook assumes that we will have lower interest rates. So that should drive the positive cycle as far as insurance companies is concerned. And at the end of the day, when we compute the insurance valuations based on the embedded value, very often, the poor performance, the starting point of an embedded value is what is your current net worth for the company. And that net worth very often is determined by what the profitability has been in the recent past. So there is still time for that net worth to start showing up before the embedded values in the entire computation start showing an uptick, and therefore the valuations move up. Until then, I would be remaining a little more cautious. And the current news that you talked of in terms of the surrender value going up could be a move that could really jeopardize the profitability of the companies, and the very fact that I was talking about in terms of net worth positions of many of the insurance companies. So right now, I'd be a little cautious on the sector and wait for further developments there.
All right, we'll be cautious on the life insurance space is what Mantesh has to say. But let's put the spotlight on the auto sector then. Mahindra and Mahindra is the top gainer on the Nifty today, and it has unveiled its latest offering, the subcompact SUV, that's XUV 3XO. With this sort of a launch, the company has entered into the fiercely competitive segment with the pricing starting at around 7.49 lakh rupees. Let's find out who are the rivals for this particular model, as well as what should one watch out for. Shrishti, over to you.
Well, yes, that's the new launch and subcompact SUV launched by Mahindra and Mahindra. That is indeed keeping the stock excited as well. Why not? Because the new launch is loaded with full of features for the company, and a very aggressive and competitive pricing is what the company has done. The XUV 3XO is going to compete with some of the very successful models in this space from the likes of Tata Nexon, Maruti Brezza, Hyundai Venue. And if we see the pricing, then the company has done quite an aggressive pricing, because from all of these models, which starts range around 8 lakhs, the company has come out with a price of 50,000 lesser than those, from 7.49 to 15.49 lakhs is the pricing for XUV 3XO. Also, to give you a perspective on the production side, the company did say that in the initial times they have a production capacity of close to 9,000 of units, which is scalable to 10,500 units per month. But just to tell you and give you an industry perspective, the other successful models in the industry from the likes of Brezza as well as Nexon, the average monthly sales run rate is around 15,000 of units. So that won't be a surprise if we get a waiting period for this car as well, because in this price range, a lot of these features in this subcompact SUV is coming in for the very first time, from the likes of ADAS, panoramic sunroof and so on. Other than that, if we talk about the management outlook on this one, so they have also said that the company anticipates the growth in the mid to high teens in the SUV volumes. Now, M&M also aims to be among the top 2 players in the sub-SUV section in the next 3 years, wherein in this space they are at number 5 currently. And lastly, the entire project cost is at 650 crores, is what the company has highlighted. The bookings will open from May 15th and the deliveries will commence from May 26th. So all eyes on the booking numbers when it starts from May 15. But indeed, a very good offering coming in from Mahindra and Mahindra, and hence the stock is seeing no stopping since the start of the day. Back to you. Not a 4.5% move now is what M&M is sitting on. I mean, who would have thought that it's going to be now a 2150 plus stock? Kunal, worth a shot, the first car, 7.49, pretty affordable.
Yeah, pretty
and
affordable,
SUV.
but not in the mood to buy a car right now.
No, still not. Much rather buy the stock, right?
Yeah, exactly.
Yeah. Only if we would have thought like that about Trent. Right? But yeah, okay. Here's in fact Rajesh Jejurikar as well talking about this new launch. He spoke on the sidelines of the launch event with my colleague Sumit Chaturvedi.
It's been a very strong F24, and the last 3-4 years we've had some really good successes in our SUV portfolio. This has made us the number 2 SUV player by volume, but most interestingly number 1 by revenue market share. But one segment, as you said, of this SUV market, we haven't done as well. That constitutes about 25% of the 25 lakh total SUV sales in the country. In that segment, which is 6 lakhs per year, we are number 5 player. So when we said, now that we've accomplished success in many of the other segments, we really need a disruptive product for this segment. And really the 3XO, as the name suggests, is meant to be a multiplier effect, is meant to be.
Welcome back. You're watching Closing Trades on ET Now, and over the last 15 minutes, we've seen some sort of a downtick creep in for the markets. The Nifty is now off 73 points from the day's highest point, and one of the major drags definitely has to be what the OMCs are doing. Over the last 15 minutes, we've seen a sharp knock in all of these OMC counters, be it IOC, BPCL and HPCL, and you could say the culprit for that is definitely IOC's Q4 numbers. We have Sumit to tell us exactly what impacted the numbers in the quarter gone by, because the stock saw a nosedive, Sumit, after it reported its numbers.
Well, the biggest disappointment that had come in the Indian Oil Corporation numbers in the fourth quarter was the fact that the EBITDA of the company was nearly a miss of more than 30-odd%. The street was expecting the EBITDA number to be close to 15,600 crore rupees, but the company has reported an EBITDA of just 10,435 crore rupees, a decline of nearly 33% compared to the previous quarter. Now, in fact, Q4 was expected to be a strong quarter for the oil marketing companies, given the fact that Singapore gross refining margins were on the higher side on a sequential basis. Petrol and diesel marketing margins were also on the higher side, and OMCs were supposed to report an inventory gain. But what could have gone wrong here is based on our analysis, what we spoke to market experts and stock experts. What we understand is that the company might have reported an inventory loss, because of which we are seeing this kind of a mismatch in the reported numbers and the analyst expectation numbers. Because of this inventory losses, we are seeing this 33% miss when it comes to the EBITDA number. Now we still have not got the granular details, so we cannot confirmly say that, but most likely it will be because of the inventory losses. Apart from that, the Singapore gross refining margins and marketing margins were on the higher side, so those cannot be the reason why Indian Oil Corporation might have reported such weak set of numbers in the fourth quarter of FY24. On the positive side, however, the company has announced a dividend of 7 rupees, which is the final dividend, and which is a very high number compared to what the street was expecting. Street was going around with a number of around 3 to 4 rupees per share on the higher side. In fact, the company has reported a dividend of 7 rupees. So inventory losses is something that could have gone wrong in the fourth quarter. So we need to wait and watch out for whether that is the reason why Indian Oil Corporation has reported the same weak set of numbers.
You can see the stock drift down. It's fallen by over almost 5.5% actually from where it started off the day, which was pretty much around the day's peak, currently lower by about 4% as we speak right now. For the markets, for the index, like Cheryl was just pointing out, it's pretty much given up all of its gains after that dash with that all-time high. From there, we've seen a swift and sharp move downwards. But yes, the Nifty Bank as well has been hovering around the record highs. What's in store for us next? What are the levels that one needs to monitor? What could be the trigger points? Sharad is here with all that analysis. Sharad?
Well, yes, Nifty Bank is in focus, and we are all waiting for that to touch the levels of the 50,000 mark. But the question remains is how we have actually done the entire weightage is happening in the Nifty Bank. That is something interesting to know. The private names, of course, on the larger side with HDFC and ICICI Bank contributing almost more than 50% of the total weightage index. That is an interesting trivia. Also, the key level dates where these numbers have actually been touching. Of course, we'll be looking at 10,000 point. It touched in the year 2007. And that's the 11th December 2007 is when the level had touched 10,000 levels. Now also 20,000 levels, if you look at it, it took almost 8 years to Nifty Bank to go for that mark. And then after that, it's in 4 years that mark was taken at 30,000. And in 2021, it had touched the 40,000 levels. In the matter of 3 years itself, now we are very close to the 50,000 levels also. Now let's look at how Nifty Bank's earning overall returns has been on a 10-year basis. And this is the calendar year basis which we have taken. And of course, if you look at it, large numbers are actually coming in in the year 2022 and 2023. That's where the number coming is on the higher side. Also in 2017, it went up as high as 41%. Also 2016, look at it, that is also where a good growth has come in. But there are certain stocks which the journey has happened from 40,000 to 50,000 or the near the 50,000 mark if you look at it, and the stock returns over here in 2024 so far has been almost 3%, but the stock returns, that is something which we'll be looking out for, and that has actually been, PNB has actually been an outperformer, almost going up 3 times, strong returns coming in for Federal, SBI as well as Bank of India as well. Also Kotak Mahindra Bank and Bandhan Bank actually coming in the negative in this region, but ICICI Bank, if you look at it, that has been one of the best performers with almost 54% return. Even the valuations, if you look at it, valuations ranging between 1.4 to 1.7 for the larger names for FY25 on a price to book basis, while for HDFC Bank, AU Small Finance Bank and Kotak Mahindra Bank, the valuations are on the higher side as compared to their peers. Now, what is the triggers for the banks? That is something which we will be looking out for. And of course, last 2 days, the numbers have been very strong when it comes to the overall earnings. Advances have been healthy. Asset quality is still in line till now. And the asset quality, apart from that, NIMs, they have also remained stable. And that has actually triggered a good rally in the banking stocks over the last 2 trading sessions as well.
Thank you so much for that, Sharad. So putting all of that into context, the ones that, the stocks that have actually aided also Nifty Bank's performance. Mahitesh, coming to you, and let's talk about what exactly Sharad spoke about. If you look at the contribution, mainly it's been from these PSU banking names more than the private sector banks. Is that where actually the kind of a profit pool lies now going ahead? If you have to bet on the banking space, should it be the likes of a Bank of Baroda or PNB or SBI rather than an HDFC Bank or Kotak Mahindra Bank or Axis?
So I would tend to agree with that because, when it comes to the corporate revival that is happening right now, it is being led by the CapEx theme. And whenever there is a CapEx theme that comes up, you'll often find the public sector banks take a lead when it comes to doing corporate loans. So the outlook remains strong for most of the corporate banks or corporate lending banks, PSUs being one of them. As far as private sector banks are concerned, they are highly reliant on consumer loans and personal loans or consumer related kind of loans. And there is a bit of a problem that is coming up. As far as the results are concerned, one of the chief worry that I have of most of the private banks is that the asset quality being now touching very low levels, they would be now looking at excess provisioning or accelerated provisioning or special provisionings to keep their balance sheet healthy for the upcoming, or oncoming next wave of NPAs. That being so, this cleanup action that has happened in the past will start reversing and will not be favorable for many of the private sector banks. Public sector banks are better placed relative to the private sector banks simply because the corporate lending theme would mean that they will have more income coming in and buttressing their overall net worth position, warding off any NPA pressures. So they will not require much of provisioning needs as of now. When I say as of now, I think that is the oncoming year.
Okay, that's the take coming in on which way the banks are headed. Mantesh, good having you on the show as always. By the way, the market has drifted quite a fair bit. The Nifty Bank itself has fallen a good 300 points actually from the day's peak. And the Nifty as well, after hitting that all-time high, has fallen about 80 to 100 odd points from that mark. But Kunal, what closing strategies would you recommend then?
So I'll go with Axis Bank, something which I've been recommending over the last couple of days. I think at 1170 approximately, 1160 approximately, where the stock is trading right now, it still looks as an attractive bet, maintaining the targets of 1200 plus for Axis Bank over the near term.
Right. Naresh, what about your closing ideas?
So that would be a buy on LIC Housing Finance. The stock has been testing that 670, 680 mark, which has been a resistance. Came very close to 680 today as well, expecting it to break out in the short term.
Okay, on that note, we'll take a very quick break. When we come back, we'll continue tracking markets, given that we've given up all of our gains from just half an hour back, and we're now already drifting into the red.
Welcome back. You're watching Closing Trades on ET now, and as you can see on the bottom of your screen, the markets have given up all of its gain, almost 160 points off the day's highest point for the Nifty as well as Nifty Bank. But let's bring on board Deepak Nitrite to talk more about the markets and what you should expect going ahead. A very good afternoon to you, Deepak. Thank you so much for joining us on ET now. And yes, the markets have given up all of its gains. The banking sector actually putting some of the pressure right now. But where do you see the likes of Reliance and HDFC Bank going ahead? No doubt they are the bellwethers. Everyone is counting on them to perform well. HDFC Bank has been a disappointment in that on that front.
Good afternoon. Thank you for having me on your show. See, basically, I think these are mature stocks and there's no real buying trigger in either Reliance or HDFC Bank. A lot of the variables now have got discounted, and particularly coming to Reliance, I think the next big trigger has to be how they're going to unlock the value in the subsidiaries, whether they're going to split the company or do IPOs, whereby Reliance Industries becomes a holding company, and then they will have a holding company discount coming into play over there. But at these levels, I think a lot of the positives have got discounted. And on the whole, the results which came from both the companies, Reliance and HDFC Bank, were more or less in line. There was nothing surprisingly extraordinarily positive for many of the investors or traders to change their short, medium, or long-term view on the stock performance.
The other thing, Deepan, you have elections already rolling. Soon, the chatter is only going to increase about how many seats, what's really going to be the math, etc. Do you think it's best to take some chips off the table? Many are cautioning of an acutely volatile May. And do you think that old adage of sell in May and go away this time is not going to hold true?
No, see, we have been advocating a cautious view for past several weeks, if not months. And markets have been just going up and up and up. And every time there was a correction, I thought this was the one which would be a deeper correction. By deeper, I mean a 10% up for correction. And even deeper would be trying to test the 200-day moving average, which hasn't been tested for many, many quarters. So we've been expecting a correction, but I can't understand what could be the trigger for the correction. I just feel that the corporate earnings which have come so far are mildly disappointing and do not justify the present run-up which has taken place in stock prices or the present valuation multiples. So from that point of view, at some point of time, there will be, kind of a shakeout over here when valuations are again, stretched as they are just now. So, and of course, we have the elections coming up also. Even minor disappointments over there can cause volatility. The present earnings season in itself is causing a lot of volatility stock-wise. So on all counts, I think be it valuation, be it liquidity flows, be it the news flow, I just want to be a bit cautious and leave some cash in the portfolio. That cash is strategic. It may not earn any return to you just now, but should there be a deep correction, it's that cash when you deploy it at the bottoms is what generates the alpha in the portfolio over the longer term.
All right, so leave some cash on the table is what Deepan has to say. Cautious on the markets, and as you can see, we are drifting lower. Any scope of recovery actually is getting sold into. But let's find out which are the price volume action of the stocks that are seeing good price volume action in trade today. Ansh is here. Ansh, which are the stocks today?
Right, so in this falling market, we still are seeing some good breakout stocks. So we'll start with Power Finance. As you can see in the chart, stock has given a good breakout from its reverse head and shoulder chart pattern with volumes of over 5 times its average trading volume of last 10 sessions. The stock has also hit 2-month high on intraday basis today. Apart from this, Jubilant Foodworks will also be in focus as the stock has actually given a breakout from its 6-session consolidation pattern. Also, it has also given a breakout from its long-term downward sloping resistance trend line, surpassing about 20 and 50 DMA levels with volume of over 4 times its average trading volume of last 10 sessions. Lastly, REC will be in focus as the stock has actually given a breakout from its falling wedge chart pattern and it has been advancing for 7 consecutive sessions. The breakout was led by volume of over 6 times its average trading volume of last 10 sessions, indicating good participation in today's move. So keep an eye on the stocks.
Leave it at that. The entire Power Financier pack once again buzzing on in the show in trade right now. But Dipan, that's the other thing. I mean, everyone knows that it's time for caution. You were also saying that, not just for weeks, and we've been chatting about it. For months now, you're cautioning that the market is getting a little heaty. But then when you look at names like PFC, REC, or the way Trent has reacted after its numbers, I mean, all metrics, completely fail and fade away in front of the moves that you see on these kind of stocks. And it just gives you a sense of the insatiable appetite in the market right now.
That's the right thing you said, insatiable appetite. I hope I got the pronunciation right. And it is this appetite for stocks which is keeping the markets at high levels despite broadly disappointing numbers. I mean, look at the earnings season so far. Entire technology pack has disappointed, right from TCS to so many mid-cap stocks. Only one exception, that being KPIT. Across the board in banks, we are seeing a slowdown. Pre-provisioning profits, which is the key metrics to be monitored, is all either flattening up or low or single-digit type of growth rates over there. Then come to some of the other sectors also. Consumption-oriented, excluding Trent, I think has been very disappointing. FMCG, excluding Nestle, has been disappointing. So once you go from sector to sector, you will realize that things are not looking as great. Cement, disappointing, except for Ultratech so far. So when you look at the entire spectrum of industries, we do feel that growth rates are slowing. They are doing so because of high base effect and also because of a cyclical slowdown, which we are seeing in many industries. But there is so much of liquidity flow coming into the market through the SIP route, through mutual funds, through portfolio managers. And that's what's keeping the markets elevated at these levels. So a serious correction can only happen if these flows somehow were to be shaken or a pause is kept over there for whatever reason. And I don't know what reason it is, so just preempting you over there. And unless you don't have the liquidity tap turned off for some time, I think markets will remain at these levels. They may not go up higher, but you'll keep on having this rotation in stocks. Like see what happened today in banking stocks. Despite disappointing numbers, investors bought into banks and sold off maybe some of the other stocks. And coming to a specific question about Trent or REC, PFC, look, in any market, bull or bear market, there'll be always some stocks which will surprise because of their numbers. And typically, in my experience, these numbers come in the beginning of the earnings season, and the real disappointments come towards the end of the earnings season, and we are just at the beginning of this earnings season. So let's just wait and watch. And as I said, that unless the liquidity in some way it gets impacted, I don't think you will have a meaningful correction. So I know I'm talking all over the place, but that's the confusion that we are grappling with at this point of time.
That is the state of the market, right, Kunal? I mean, one day you have a big gash down on a Kotak, HDFC Bank doesn't move at all, but then in the same sector, you have stars like Axis, ICICI Bank pulling it up. And within minutes, the market gives up its gains. You really don't know which way it's headed. Can you read that on the charts, though, that all is well?
Yeah, so far it looks like all is well. But then, I think as Dipan also pointed out that the, fragmentation in the market is getting a lot more, visible because this time around, you're not seeing too many large cap names participating in the same gusto. There are few stocks which are, adding more weight to themselves. And I think that's where you're seeing a lot of expectation of performance. The underperforming ones continue to underperform. You tend to see some bit of pickup of price action over there. But net, when you look at the analysis, say in a matter of few weeks, few months or so, then you look at the stronger names getting a lot more stronger. Now, buying these stocks at the peak of momentum is always a bit tricky because the risk reward is definitely not favorable. Momentum, of course, could be another side to look out for. But then I think that's where the biggest quandary of the market is right now, that we are at a point where the indices have hit fresh highs for themselves, but the option in terms of buying stocks is not too much. It's getting a lot more limited.
Right, so that's the word coming in from Kunal as well. For now, at least, is looking that all is well. But yes, all is well, at least for the auto sector in trade today, holding on to good gains. You have real estate sector also holding on to good gains. Is the IT index that's taken a sharp knock, and it has been the top sectoral loser from the word go. But let's bring on board Sharad to understand what's the dealing room buzz right now. Sharad?
Well, yes, in focus is Deepak Nitrite, and what we are gathering from the dealers is in certain baskets, HNI segment has been active, especially in some delivery-based buying. Now, importantly, channel checks suggest that the Dahej plant's expansion, one part might be announced soon, and the expansion is expected to come in the coming weeks. And this is for a value-added product in the phenol segment, and this is basically a part of the forward integration process where this material will be coming from. Now, of course, over the last week, we did know that the phenol spreads are on the upward side, which will actually help aid the operational numbers going ahead for Deepak Nitrite. And interestingly, the stock is up 19% from March lows. And if you look at the technical chart, it's on a verge of a 28-month breakout as well. So do remember that as per channel checks and dealers, Deepak Nitrite, there's certain HNI buying happening in the stock.
Okay, Deepak Nitrite is something that you should hold out for. And of course, tomorrow you'll have Motown declare its April sales data as well. Of course, today the enthusiasm is all around the new SUV launch from M&M, which happened yesterday. And today you're seeing a fabulous stock price action. But let's see which way Motown actually heads. The rural demand recovery clearly has been a big question mark. And that's reflected in the tractor sales as well, or farm equipment sales, which we saw for the previous month as well. So I think, that remains to be seen whether there's going to be a meaningful recovery coming in there or not. But Dipan, just wanted to, get a sense of, for whenever that meaningful correction comes by, which everyone's waiting on, where is it that you would deploy cash, and what is looking attractive, something that you would add to or buy afresh?
I think the outperforming stocks like, trend 30-40% lower. And you mentioned PFC, RAC, some of the PSU defense stocks, consumption stocks like Titan, which typically you can't buy in a bull market. I think those are the ones which one would target. Basically, long-term secular growth stories which have run up. And then, a few select sectors. I do feel that pharmaceuticals, will be the outperforming sector over the next 2-3 years or so. Some structural changes are taking place over there, particularly those exporting the US generics market. But, slight correction over there would add to the margin of safety. And maybe even some of the private sector banks, the larger ones, to bring about more stability in terms of returns in the portfolio. And all end of the day depends upon, where the stock, what stock price corrects as well before one can take a decision like this. No new investment themes are going to come through. It's going to be consumption, capital goods, export-oriented businesses, what we have seen. But it's just that if you get a good quality business at a reasonable valuation, and there are very, very few at reasonable valuation just now. But in a correction, if you get that particular, those kind of stocks, and that's where you should be focusing on.
All right, let's actually put the spotlight on the pharma sector then. Naresh, that's one spot that no one's been talking about of late, and it's actually given up all of its gains in trade today. But what's your take on the pharma sector? Are you seeing any scope of recovery in that one? Do you see any select pockets that look attractive?
So selectively, stocks have been doing well in the pharma pack. If you look at Aurobindo Pharma, the stock came back to a new all-time high, very close to it today. You had a spike in, say, a Lupin of late, which has been doing well. The stock was almost close to the recent highs. So out here, there are many selective moves as such. The names which I like right now is Aurobindo Pharma, which has broken out, and Dr. Reddy's Laboratories, which has made that base around that 6,000 mark, and 6,500 is a breakout point. So if it sustains above those levels, it could be a much bigger move. So on dips, Dr. Reddy Labs looks interesting, as well as Aurobindo.
Right, so that's the top favorite coming in from Naresh when it comes to the pharma space as well. But actually, let's hear out what Vijay Kedia is betting on right now. He shared his investment rationale for the current bull market and also said the investors should chase the story behind the stocks. Let's hear out.
I had invested in Reliance Infrastructure, as you know, because it is on public domain. So, but as now I'm thinking that maybe that call was wrong. Maybe while I'm talking to you, as of now, I'm thinking maybe that call was wrong. So it's okay. We'll see to it.
But are you holding on to your all other investments, Web of Gems and even for that matter, Tejas?
Almost Tejas, Network and all those. Yes, I'm holding. More or less I'm holding. Maybe I have sold little bit here and there just to buy some new companies and all. But I still have a meaningful stake in those companies.
We spoke about Indigo, I think in 2022. And less than 2 years, and Indigo has doubled.
Yeah.
1800 has almost become 3600.
39, 800, yeah, whatever.
Thank you first on behalf of everybody for identifying it. I'm sure viewers must have benefited from it.
God is real.
But where is the franchise headed now? Because Indigo is the third or the fourth largest airline in the world in terms of market cap. Do you think large money has been made?
I tell you one thing, Nikon. We should always keep our aim high, no? Whenever the promoter of this Indigo sells his shares, no, I always feel ये शेयर बेचता है ना मैं ले लेता हूँ सारा
क्या बात है?
I tell you.
Now we know that who's buying the share in the block deal.
No. I cannot buy because he's selling 2,000 crore, 1,000 crore worth of shares. मेरा औकात उतना है नहीं भाई. So, but always it comes into my mind कि ये शेयर बेचता मैं कैसे किसको shares ले लूँ. Coming to your point, I feel this is a sunrise sector, yeah. Now at that time, whatever data I gave to you in 2022 budget day, now everybody is talking about those data. Yeah, 23 budget, I think, not 22, 23 budget. Yeah, 23 budget. Just 1 year.
Yes.
Only 13, 14
Yeah,
months.
23 budget. Yeah.
So I think sky's the limit for this company. And it's not a recommendation, but I am holding my shares. And still 1,50,000 crore market cap here. In this economy, now everybody, I have told there is a quote of mine, Nikun, that when luxury becomes a necessity, a big story is there in the making. I think same thing is happening in this airlines industry. So miles to go.
Where to your mind are the red flags in the market? खतरे की घंटी कहाँ पर है अभी?
खतरे की घंटी रोज चलती है बॉस, रोज यहाँ घंटी बजती है. जब बाजार का घंटी बजता है ना तो सबको लगता है खतरा होने वाला है. जब बंद हो जाता है बाजार तो सबको लगता है खतरे की घंटी बंद हो गई. फिर रात को यूएस का मार्केट देखते हैं, बोलते हैं खतरे की घंटी चालू हो गई.
Well, opportunities where luxury becomes necessity. Deepan, going with that theme, I know Trent is something that we've already talked about. No, not quite, though not quite pure luxury. But where else do you find, value and opportunity in any of the names, if you will, within the K-shaped premiumization themes, etc.?
I think specialty retail companies, like say Vedan Fashion, Campus Activewear, Ethos, Landmark Cars, Metro Brands. These are all companies, which last 2-3 quarters have disappointed on the earnings front, but valuations still not have corrected. These stocks may be off 25-30% from their top as well. And a lot of the fluff and speculative activities out of them. But end of the day, these are superb secular growth stories run by managements which are extremely aggressive and have excellent execution capability. So when you look at a 5, 10, 15-year type of a view, I think these are the future stocks which can turn out to be multi-baggers if you buy them at attractive valuations. These are great businesses because the brands have created a moat by themselves. And, they're all there on my watch list as a measure of disclosure. We may have been investing in a few of them, but nothing material. But those are the kind of businesses that I'm looking at, like the next Titan, which can come through, or the next trend. And these are great companies, where to find such multi-bagger stocks, just that you need to buy them at the right price.
Kunal, let's talk about where luxury becomes necessity. Let's talk about one of the sectors that has changed on back of the lifestyle changes that you've seen is a huge spike that's come about in all of these alcohol beverage companies and spirits companies. Where do you see value now, given the fact that all of them have seen spectacular rise over the last 1 to 2 years, isn't it?
Well, yes, they have. And I think, few of the stocks, I remember from COVID lows, they've rallied more than 5x to 7x. I think the likes of, for example, Global Spirit, GM Breweries, Radico. I think Radico was almost 150 stock, rupee stock in just for some 4 5 years back. And that stock has now moved into 1,500, 1,600 plus levels. So many of these stocks, they've done exceptionally well for themselves in the last 3 or 4 years. There are many of the stocks which have recently listed names like Sula, for example. That stock has also done reasonably well post the listing and looks attractive from a medium to longer term play. You have some distilleries which has also looked very attractive. In fact, the stock has recovered more than 50% in the last, I think, 1 or 2 months or so from the March lows of 200, 220 marks. So a lot of fresh names which are looking attractive. The only underperforming name I think in this pack relatively, I think, has been United Spirits, because at a point when many of these stocks have given returns of 3x, 4x, 5x on an average, the stock has been a lot more subdued in terms of price performance.
Right, so that is all about the performance coming in on the alcohol beverage companies. But let's put the spotlight actually on the NBFC space. A slew of companies actually have come out with their numbers over the last 2 to 3 trading sessions. NBFCs, like I said, is in focus on back of earnings. Strong commentaries coming in from the likes of Poonawalla FinCorp, from Spandana Spurti. And let's actually hear out what the management had to say on the way forward.
To do the apple-to-apple comparison, we are in top 3 across the NBFC segment. Since we operate at 102 branches, but maximum we are gaining market share there. And going forward, whatever guidance we have given, 35 to 40%, I think in the past also we have over-delivered. Going further, we'll stick to our guidance and we are confident of achieving the given guidance. And we are confident while achieving the growth, there will not be any asset quality issue. The new book is performing really well. There is a reduction of GNPA, if you see, from 1.44% to 1.16%, net NPA from 0.78% to 0.59%. So going further also, you can expect further improvement in terms of asset quality.
We will be comfortable with a NIM anywhere between 1375 to 1425. The reason why you saw the uptick was better management of timing, because carrying cost is what we've substantially improved on.
Now that in Q4 we are back to a run rate, which in fact we started in December itself, a run rate of about 700 crores a month disbursement. And in this quarter, we have had almost close to 800 crores of disbursement in a month. So we are looking at somewhere around, you can say about a 15% AUM growth should be back. We have taken a lot of steps in terms of centralizing processes, in terms of strengthening some of our processes. We have also put in a lot of effort in terms of training, in terms of additional checks for our 100% of our loans, we have now started having a credit monitoring from the head office.
We also got the rating upgrade from AA to AA+. So that will also ensure that in next few quarters, our cost of borrowings will come down. So FY25, we are looking at book growth of 17% on retail. So disbursement will be about 24-25%.
So that's the word coming in from all of the NBFC players who we've spoken to through the course of the day. But let's hear out what is the BTSD trades coming in from our chartist for today. And Kunal, over to you. What's your BTSD trade?
So I'll go with Bank of Baroda, the stock which apparently is now on the verge of breaking past about the previous major highs of 282, 284 plus levels. So would suggest a buy with a target of 300. Stop loss could be kept at 276. And Power Finance is something which I recommended in the morning. It's done pretty well for itself, reached those targets of 440 plus. So I think traders could look at a fresh buy even at current levels. Targets revised on the upside to 475 and stop loss at 424.
Right. Naresh, what about your closing ideas?
So first would be a buy on LIC Housing Finance with a revised stop loss at 670, target price of 690. Second would be a buy on HDFC MC, which has given a breakout, stop loss at 3870, target price of 4050.
Okay, let's begin winding up for the day then. Tomorrow, of course, is a trading holiday. But Deepak, Kunal, Naresh, great to have you guys on board with us. We'll see you again with the market action on Thursday morning. For now, of course, we've given up all of our gains, just about barely latching on to that 22,700 print on the Nifty futures. And sub that mark, of course, for the Nifty spot as we speak right now. While M&M, Shriram, Hero Murkop, Nifty Bank managed to hold on to their gains, that was not quite the case with a BPCL, with the TCS, with the TechM, Tata Steel, L&T as well. SBI drifted into the red. Axis Bank as well gave up most of its gains, and Reliance has closed in absolutely flat for itself. For the broader end of the market as well, which started off well in favor of the advances, has finally closed in the red, and at least within the F&O universe, it's a count of declines, which is favoring the advances. So pretty much running neck to neck with a slight bit of advantage. IOC has been quite a drag after its numbers. Almost a 5% cut is what the stock is closing in the day with. Even some of the movers like an AB Capital was down today, down about almost 4%. Birla Soft reacted to its earnings, but negatively so. Was down about 3.6%. Tata Chemicals, again, weak numbers there. The stock got punished, was down about 3% today as well. But of course, there have been the star performers as well from the broader markets, the likes of REC, PFC, Jubilant Foodworks, or Ashok Leyland for that matter. But for now, we're going to wind it up on this edition of Closing Trades. Thanks for watching.